Hello, everybody. So, Enphase reported its earnings, and the market is kind of freaking out, calling it mixed. And I think the market is kind of throwing us a bone here because this is a stock that I believe over the next 10 years, and to see it at 145 is very 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 much a dream come true. I love it so much. I kind of hope it goes down more because there's a lot of stocks that are very expensive right now that I could sell, like SaaS stocks. So anyways, I'm very happy about the stock being down, and the question is, was the quarter really that bad? In a nutshell, somewhat. Yeah, it was somewhat bad. I mean, the sales are pretty much on target, minus 2%. The EPS was higher, but I guess the market's supposed to care about EPS. It didn't care today. But even though the results themselves are mixed, what really spooked the short-term investor, right? And remember, all analysts are 12 months out analysts, right? The price target of analysts, that's 12 months out. What really spooked them, I believe, is the guidance, and I've kind of just computed it against graphically. So this is the trends from macrotrends.net, and this is all of the revenue figures, and revenue actually has been up almost 80% per year over the past 3 years. So revenue growth has been outstanding. Even though there's been obviously a slump in the early 2020s, it looks like we're seeing another little slump here. But all of this to say that there is some cyclicality to this business. There is some cyclicality, but does that really mean that the business is dead over the long run? I absolutely don't believe that. So when you look at Q2 is down quarter over quarter, so down sequentially at 711 million this Q2 compared to Q1 at 726 million. If you follow the channel, you know that I like to look quarter after quarter, even though there's seasonality every time for each quarter. But anyways, Q3, they've guided it pretty low at 575 million, and so only future will tell whether it's a sandbagged guidance or not. I will be listening to the call after this short video just to really make up my mind as to whether I think this is sandbagged or not. But in the meantime, I believe we've had amazing commentary. So when I read the commentary for this letter, we know that the United States decreased 12% in the second quarter compared to the first quarter due to macroeconomic conditions. And of course, interest rates are very high. Sellers of these systems are trying to find new way to sell those systems with those interest rates being more high. A lot of customers were buying those systems with debt. That's point number one. Point number two, which I'm sure they'll address in the call, is NEM-free in California. The advent of NEM-free in California means that there's fewer cells in California right now. This was expected. We expected it. We expected the U.S. to be down, perhaps a little more down than what most of us may have expected or hoped for, but let's not let this hide the U.S. Let's not hide Europe, because Europe is doing so well. The revenue in Europe has increased 25% sequentially, so 25% compared to the first quarter of Q1. Q2 in Europe was 25% higher. And so I'll be, in my next video on Enphase, I'll be looking at the breakdown, but I'm pretty sure we're nearing Europe being a bigger business for Enphase than the US. And if these trends continue, we're going to have an Enphase that's going to make most of its revenue in Europe if these trends continue, if the US interest rates keep being so high. And of course, I'm not worried about that because the name of the channel is Beat the Denominator, and I know full well that the US government can't pay $1 trillion in debt. Interest rates are too high. They can't pay $1 trillion in interest rate right now, which is what they're literally paying on their debt. The debt has to come down. It's very, very obvious to me. This was the last rate hike. So I'm really not too worried. I know the market is short term, but I'm really not too worried. One thing that I find exciting is that's it. They received their first check. Look at that. 50,000 units have been shipped from U.S. manufacturing facilities, which means that they got a benefit of $1.6 million. So I had calculated that just a tad higher in my video, but I wasn't that far off. I think I was at 37 per microinverter. But Battery on the call say that he would be sharing some of the subsidy with the manufacturing contractors. So I guess he shared a little bit of subsidy, but the US gave them $32 per microinverter. $32 per microinverter. I mean that covers so much of their cost of goods sold. They have the greatest incentive in the world to manufacture as much as they can in the United States, keeping in mind but these microinverters usually retail a little bit north of $100. Like you can find them for 110 and 120. Out of a product that costs $120, they receive $32 from the government, and I believe this number will go up. Obviously, as they manufacture more stuff, and we have even more good news. So this stock Enphase was essentially, in my universe, the stock that remained a good deal throughout the past 3 months, right? Everything's up. This stock remained a good deal throughout the past 3 months, and they took advantage of their shares being cheap because they bought back $200 million of their share repurchase program, and they've entirely expanded it. So they've bought back $500 million in shares since May of 2021. Great timing. Average cost of buying back their own stock was $159, and they've just announced, and this is amazing, they've just announced $1 more billion, a program to repurchase up to another $1 billion of their stock as the stock is down. So this is a company that definitely believes in itself and buys back its stock at the right time, right? I would have hated to see Enphase buy back its stock when it was trading around $300. I love to see them about to buy back their stock if the price holds right now $145. I love to see them buying back their stock at $145. To me, this is a secular story. This is a long-term story. This is a 10-year story. The numbers are as follows. In the US, you only have about 5% of single-family homes that have solar on the roof. In Europe, it is only about 10% of single-family homes that have solar on the roof. If you study the technology, if you study solar, if you realize that solar is taking energy costs down to zero, if you realize the need for charging at home, most electric vehicles are getting charged at home, the need for greater energy, all of the benefits that come from producing your own energy, once one realizes that, and I believe I realize it, there is, I mean, in my mind, I am so confident in this stock over the next 10 years. Investing is a marathon. It is not a sprint. Short-term analysts will be upset and will bash this report, but to me, this business is on track, and I am looking forward to buying more shares tomorrow. I am now off to listening to the conference call and listening to any nugget I can catch, and I'll make another video on Enphase and their conference call tomorrow. Thank you so much for watching. This is not investment advice, just entertainment. Please like, please subscribe. Have a wonderful day.